Welcome to a galore of opportunities to invest in India. In this video, we will talk about the opportunities that India has created to invest right now in the markets. High inflation, wars keeping the commodities prices at high. Europe is already into a recession. US is waiting to get in. Countries like Sri Lanka have collapsed. China has got into its own created problems, while India is shining. What should I do now with my investments? Should I get out, stay invested, or should I add more? Let's look at it, the surroundings around us to understand where we are as a country. COVID brought panic to the governments and made them give out free money to their people. People didn't know what to do with this free money. They put it in the stock market and bitcoins took them to the roof. Inflation came. Money tap was closed. Interest rates went up. To make things worse, war took the commodity prices to the roof. Sanctions became counterproductive. Europe is now starving as well as shivering. They don't know whether to heat or eat. Countries like Sri Lanka have thrown out an example that giving freebies is going to get them into trouble, and there are more countries waiting in the queue in the same disaster. In all this mayhem that's going on around the world, India proved it that we are different to the world. We managed COVID well, inflation was kept pretty much under control, and our relationship with near and far away countries helped us get commodities at lower prices. All this made India literally a heaven on earth. India is in the sweet spot now. Let's look at what are all the advantages that India has brought to its country and made a beautiful investment opportunity today in the world. Let's begin with GST. I still remember those days, late 2017 and early 2018s, when GST collection used to be 1 lakh crore. It will be celebration time, and whenever it used to slightly dip below 1 lakh, that is about 97,000 and 98,000 crore, critics used to celebrate that, saying that GST was a wasted effort, it is not going to be successful. But today, in the last 6 months, GST collection is above 1.4 lakh crores for the last 6 months, 40% growth in business. That's what it means, right? Then Jandan accounts, when it was announced about 4.5 years back, banks used to frown to open these accounts because that was very difficult for them. It went on to such an extent that HDFC told its employees, if you open a Jandan account, your incentives will get cut. Still, government banks pushed themselves to open Jandan accounts, which was about 15 crore accounts at that time. That 15 crore went up to become 45 crore accounts now. And all of us thought that government is making a waste effort by doing this, opening this account. Opening an account to a person who doesn't have money to take care of his next meal, what is it going to serve? That's what the world thought. But today, the average balance in these 45 crore accounts is 4,200 rupees. 45 crore accounts into 4,200 rupees will culminate to 1.89 lakh crores. This is the money that is sitting in the savings bank account for the banks who open these accounts. Even if 50% of this money is being lent to the borrowers at 9%, banks are going to make 6,000 crore beautiful profit from this money. This is what government has created for our country. Next is savings. We used to have our savings at 1.3% of our GDP 4 years back. Today, we are at 5.3% of our GDP as savings. It's soon expected to cross the double digit mark. That is, when we save more, we are going to invest more, right? More buying of jewelries, gold, real estate, bank deposits, and invest into financial markets. Our SIP book size, which is at 12,500 crores today, shows where the savings have come. SIP book size has grown 4 times in the last 4 years. I still remember in 2015-16 when we were discussing between fund managers, our book size used to be 1,874 crores per month. Today, at 12,500 crores, that itself is contributing to about 1.5 lakh crores of new money coming into the market for investment. So this is what helped us to observe all the selling pressure that was there in the previous months in our market. When FIAs started selling India due to the interest rate hike in the US markets, about 4 lakh crores went out of our market. Almost all that selling got absorbed by the domestic money that came into the market. That's why when the whole world went down 21% in 2022, India is just down 3% in the same period. And this money which is coming into the market through retail flow is going to be staying in the market. It's a sticky money, unlike FIAs which come in and go out every day. So the fear of FIAs is almost zero in the market. Today it is they who want us, not us. We don't want FIA money anymore. We have sufficient more with ourselves. And one more advantage that has happened here is FIAs who went out of our country in a hurry are now started coming into it in a hurry again. They wanted to buy India before it goes beyond reach, and that is also pushing the market up. You can see how beautiful the situations have created for us, being invested into the market when they were selling, and today when they are coming back, they are making us more rich. Today mutual fund investments in our country is 38 lakh crores. It's grown 5 times in the last 10 years. Huge money is coming into financial assets. Next is digital payments. India became one of the greatest example to the world on digital transformation. Our UPI was a game changer. Today, every day we have 650 crores worth of transactions going through UPI platform alone. The more faster the transaction, more business that is going to happen. When FIIs started chasing our economy to buy in a hurry so that they don't miss out on prices, domestic is continuously buying our market, and there are no IPOs in the market today. The reason for not having IPOs is market made these startups realize that if you are coming into the market with a loss making company to list in the market, we are going to punish you. So no IPOs. When no IPOs are there, both FIIs and domestic are buying, stock prices are only going to go higher and higher and higher. So why is FIIs chasing India today? There are many reasons. One among the reasons we will talk here. India has doubled its weightage in the MSCI index. This is an index that is formed by Morgan Stanley to track 25 countries on their growing businesses. India's weightage in MSCI in 2020 was around 7.66%. Today it is 14.11%. That is, for every $100 that foreigners invest into the emerging market, foreigners invest through the index so that the stock allocations get taken care of by the institutions who form these indices. So for every $100 that is coming into the emerging markets, India used to get a share of $7.66 2 to 3 years back. Today our share is $14.11. So more money is chasing Indian stocks. So obviously this is going to help us grow up further. India replaced Taiwan to become the second largest weightage in MSCI. India gained 6.45% in the last 2 years. At the same time, China has lost 7%. So all that the Chinese government lost in the, or Chinese economy lost in the MSCI index weightage, India has been gaining. So all the losses of China is India's gain. Recently, Moody's had cut India's GDP growth by 1%, bringing it down to 7.7% from 8.7%. When I have been talking about so much positives about India, here is one number which is showing negative. It's sad, right? Okay, let's compare our position with our neighbors to see where we are. Indonesia is growing at 5.61%. China is growing at 3.5%. With that, we are far ahead. And at 7.7%, India will double its GDP growth in less than 10 years. That is, India's GDP will be $7 trillion in 2032. How do you like it? Coming to inflation, we are at 7% now, came down from 7.79. When the whole world is going up on inflation, India is reducing its inflation. This is another positive that India has now. Okay, is this 7% big? Obviously not. I know all of you would have experienced 7 or above 7% inflation at least more than 3-4 times in your lifetime itself. We have been used to 7% inflation, while Let's look at the Western world, US or Europe. Their average inflation used to be around 1.6 to 2%. Today, their inflation is standing at 8.59%, up 4 times, that is 400% increase in inflation. No wonder they are crying foul and growing hot, right? While India has not gone through such condition at all. If that kind of situation has to come to India, our inflation should be 28%. Think about what will be the condition at that time if such thing happens. While there is a bizarre sandstorm blowing across the world, India is happily enjoying in an oasis. While is this oasis going to be forever? No. All our imports are going through the roof on their prices. It can bring supply shocks. So what are we doing on that? We are fast developing our move towards renewable energy. Billions of dollars have been spent to move to renewable energy, which the global world is not caught up yet. Semiconductor shortage is slowly coming down, and we are also building up new facilities. As I am talking about 2 days back, Vedanta has come into a joint venture with Foxconn, setting up a 1.54 lakh crore semiconductor facility in Gujarat. Manufacturing is improving, and India is slowly moving towards independence on all its segments. We expect and believe that this will happen pretty soon. Our corporates have been forced to go through a bad patch in the wrong time between 2014 to 2022. At the time where they were having lesser business, they were forced to clean up their balance sheets from all the froth they had created in the past decades. Bankruptcy law, NCLT, all of those made the promoters realize or forced them to clean up their balance sheets from unwanted debt, and today our corporate balance sheet has become the least leveraged and the most cleanest, getting ready to take more credit. Today, government, due to its expansion plans, is buying from the corporates. Private businesses are expanding and they are buying, and along with that, global world is buying in India. 50% of iPhone is manufactured in India now. Pixel is going to start manufacturing in India, and there are many manufacturers waiting in queue to set up plants in India. Recently we talked about the Foxconn plant, but it's a very big 1.5 lakh crore plant that is coming into India. When businesses expand, they need capital. So they will go to the banks, and balance sheets, since it is clean, banks are flush with funds with their CASA, that is current account, savings account balances. We just saw the Jandan money that is there with the banks. They are going to lend, and huge profits for banks too. With all this business growth, India's earnings growth is likely to be at 12 to 15%. If we are growing our investments by 15% every year, it will double in 5 years' time. So with 15% earnings growth, our stock market is going to double in the next 5 years. That is from 62,000 to 1.25 lakh on Sensex, 1.25 lakh on Sensex. This is going to happen before the next election, not the current one that is coming in 2024. That's the 2029 election. How do you like it? Doubling your money in the next 5 years' time. India is in one of its sweetest spots in his life journey, like how in a human being's life from youth to adulthood, he completes his education, starts earning, family comes up, all the joys start coming up. That's where India is now. Everyone in India will grow. You can also make your investments have the best returns by investing into India's story. With so much positives, the next question is where to invest now. Good time to invest into mutual fund schemes that have more exposure to manufacturing, industrial and banking or finance. These schemes are the ones which are the hottest today to give biggest returns. Technology and pharma will be at the back end. That doesn't mean that they'll be having losses. They will be in profit, but profit growth, when tech and pharma will be traveling on the back of a snail, manufacturing and finance will be sitting on top of a rocket and flying high. That is the kind of situation which is there today. There are many mutual fund schemes which have this right combination today with high exposure to manufacturing and finance and lesser or even zero exposure to tech and pharma. We can formulate a basket of such schemes for you to take advantage of the biggest growth story that India is going to have. And with print media, electronic media, social media, all of them crying growth, growth, growth in India, there will be a question coming into the mind, how much are we going to grow from here? Let me put this with a comparison. If suppose market has to go from Kanyakumari to Ladakh, let's say that is a journey the market is going to make. Where are we now? We are in Madurai, not even reached Bangalore. So it's a very long journey, and that much is the potential market is having now. Of course, it is not going to go in a straight line straight from Madurai to Ladakh. It will come to Bangalore, Chennai, Mumbai, Indore, Ahmedabad, Delhi, then Ladakh, probably Jammu and then Ladakh. So this kind of jag movement will be there. Why I am telling this is, allocate the best or the most of your savings to stocks and mutual funds today. It's like a saying that you can sell your shirt and put it into the market. That is the kind of situation that India is in now. And also be prepared to stay with your investment for at least till the turn of the decade. That's when India will make you the richest person among your group. Thank you.